One. And welcome everybody to another Smart Money Circle update. I'm Adam Sarhan. With me today is Andrew Pascal, who's the founder, chairman, and CEO of Playstudios. Ticker symbol is MYPS. Andrew, welcome to the show.
Thanks, Adam. It's a pleasure.
I always like to ask Andrew, can you tell us your story and how you got to where you are today, please?
Sure. It's quite a journey. So I've had a 30 plus year career that has spanned leisure and entertainment, having spent about half of it either creating or working with technology enabled content companies, or in the more traditional leisure and hospitality industry, mostly in Las Vegas, helping to develop and operate these large scale integrated resorts. And so, not surprisingly, my current company, Playstudios, which I founded with a core group of people that I have a long history with, really lives at the intersection of those two industries. We decided when we saw just how the broad adoption of Facebook and just the massive audiences that were engaging in play on this, at the time, this new emerging platform, we felt that it was just a natural to extend the experience of Las Vegas onto that platform. And so we had this vision to create really compelling games that, as people engaged with and played for free, they could accumulate a loyalty currency that they could then redeem for all kinds of really cool stuff in Las Vegas as a destination. And so that was the seed of the idea that served as our inspiration. And over the course of the 11 years, we've evolved that model, diversified our games, scaled up and grown our audience, and really spent a lot of energy on evolving and generalizing our loyalty and rewards platform, what we refer to as playAWARDS, so that we could at some point really extend and bring that value proposition to gamers everywhere, and not just to hold on to and preserve it for our own use. So that's a little bit about my background and how it relates to what I'm doing today.
No, I love that. Can you shift and tell us a little about your business and some of your competitive advantages, please?
Sure. I mean, Playstudios, for many, they probably outside looking in see it as, a game publisher. We are passionate game makers for sure. We're a top 25 publisher globally. But, as I just alluded to, we have a really unique position, quite surprising actually, that, even after having executed on our model for the past 10, 11 years, that nobody else has really come into the market with anything that's close to it, which is this really robust, full-featured loyalty proposition as part of all of our games. And so, our business today, in terms of our financial performance, is driven by players that download our games and enjoy and play them for free. But there are moments where they're presented with unique opportunities, or if they want to maintain or accelerate their pace of progress, they might be encouraged to start spending a little bit of money. And so most of our revenues are generated through in-app purchases. We also have a fairly meaningful complement of advertising revenue as well. But generally speaking, people are playing our games, and we use games to amass this enormous audience. We have somewhere between 10 and 15 million active players within any trailing 30-day period. And then we're delivering, not only great games, but that whole value proposition at scale. So, in our lifetime, we've given away, over $600 million, $700 million nearly of real world benefits to the players that are playing our games. So it's fun. It's not only rewarding for our players, but it's rewarding for us. We love doing what we do, and excited to just continue to scale and grow our model.
I love that. So retention is a big problem for many businesses because you get churn and all that fun stuff. So I guess what if I hear you properly is that you're solving retention by gamification, by gamifying it, if you will, and then giving them the freemium model by helping them come in the door, they play the games for free, and then if they want to upgrade, they have in-app purchases, and then you can also have advertisers advertise other services to that audience. Is that correct?
Yeah, that's exactly right. I mean, I think if you look at the way that gaming has evolved, and certainly mobile gaming has evolved over the last 8-10 years, what's gotten increasingly more challenging is acquiring players. And so discovering the app stores has gotten increasingly more challenging because The stores are crowded, highly fragmented. There's millions of new games that literally get introduced and published every year. And so distinguishing yourself from everything else and rising above that noise so that you can get some meaningful traction and a critical mass with a game is just incredibly hard. And there's the switching costs are very low. And so what we have focused on is where the point you just made, which is on retention. So, certainly you want to go on a mass audience to start with, but to the extent you can retain more of it for a longer period of time, then it just gives you more opportunity to extract value from it. And so it was surprising to us, or maybe exciting and inspiring to us, is that, loyalty and loyalty mechanics, which are very mature in terms of just understanding consumer behavior and mature industries leveraging and employing loyalty and loyalty mechanics in order to drive their business and deepen the relationships they have with their consumers. That, here you have this games industry, a $200 billion market, and there's really no meaningful presence of loyalty and loyalty programs. And so we found this incredibly unique kind of model in this white space that we could venture into. So if you look inside our company, what's fascinating, what I really love about it is that this is incredibly eclectic collection of game makers, and which obviously consists of people that are artistic and engineers and data scientists and really sophisticated product people. But we also have all of the disciplines that are needed in order to develop really refined loyalty programs. So deep experience in loyalty marketeers, and then all that comes with it in terms of how you go out and source and onboard and manage all the benefits partners, and how you tend to and segment your players and then deliver varying levels of service to those players. So all the professional services teams that we have in terms of customer service and our concierge programs and our dedicated hosts, and then all the tools that we've built in order to make delivering this proposition really easy for all the participants in it. So I don't mean to introduce maybe more complexity in this conversation, but I just want to highlight that, our company has two really interesting dimensions to it: the complexities of just crafting really great games, and the really interesting aspect of understanding more deeply who our players are and taking a consumer-centered view of our audience and our players by delivering all these really amazing benefits globally today. I talked at the opening of our call how we started by extending the experience of Las Vegas onto Facebook and onto mobile phones with these free-to-play games. But, we have a diversified portfolio of puzzle games and word puzzle games and card-based games, and as well as our chance-based games. So it's pretty exciting.
Yeah, no, I love it. It's not even complexity. If anything, it's simplifying it. It's helping the audience understand the different layers, and the fact that you saw it's an arbitrage moment. I call it intellectual arbitrage. And book, I wrote a book about investing, and arbitrage is the audience's difference between two prices, and people, or a difference between two things like gold and gold stocks, for example. So you have my thing is intellectual arbitrage and time arbitrage. So for you, Andrew, you have intellectual arbitrage where you saw retention is a massive thing in the world, and you saw gaming as an industry largely never addressed it. Yet if you can combine the both and you can have retention in the gaming world, holy Batman. I mean, that's just unbelievable.
Well, that's the idea. That's the idea. And if you think about creating value as a business, I mean, certainly you want to achieve fairly consistent top line growth. And then ultimately, as the business matures, see margins, improve and start to see that flow through. And that's great. But what's interesting is, there's a platform dimension to our business that is not typical of game publishers. Right. And so, I alluded to the fact that, we've started to generalize all the capabilities that support our delivering this loyalty proposition within our games. All of those things have been evolved and abstracted and generalized into a division within our company that functions and operates as if it's an altogether separate company. And so all the tools and products and practices and operational sophistication is evolved to the point where think of us as a third party, so that we are preparing ourselves to provide these services really to third parties. And we believe that it's an unrealized, dimension of value that is still to play out over the course of the next several years. But we think it's exciting and differentiating for us, and something we're very focused on as a company.
Yeah, no, I love that. That's really, really powerful. Well, thank you for that. So next question, let's talk about risk. How do you handle risk, and what are some timeless mistakes you've seen people make with respect to risk management?
Look, I mean, first of all, I mean, I'm a serial entrepreneur, and so I probably have a risk tolerance that's maybe a bit higher than most. But what I find is that it's in those moments where you really take on risk that you become far more open to observing, absorbing, learning, refining. And so if you believe in your capacity, and by yours, I mean by our collective team's capacity, to learn and be critical thinkers and creative and responsive to what we're learning, I know we'll adjust and find our place in the market that's going to allow us to create value. So, that's my general view on risk. As far as, a company now that is, 11 years old and has scaled meaningfully and is publicly traded and with lots of different constituencies and a global footprint, we look at and think about risk from a portfolio perspective. And so, we look at the portfolio of opportunities that we have, and we have a number of them that are mature, more stable and predictable, and that really provide and sustain the performance of the business. And then we have growth-oriented opportunities that are of higher risk, a lot of which, though, has been qualified and it's understood. And so we're investing and optimizing, and those opportunities are going to become not only the growth drivers of the business, but those franchise products and services that will kind of sustain the business in the future. And then we have a certain amount of capacity and investment that we make in altogether new initiatives that are incredibly high risk. They're so early in their cycle of being conceptualized and evolved that it's really hard to qualify whether there's a place for them in the market. There's a rigorous process that we go through before we'll even start investing. So we qualify the market and the opportunities and players and their needs and how they're evolving, and we're anticipating how those things are changing, and that's what informs our creative process. But they're high risk, and so in balance, as a portfolio, we have a complement of things that are predictable and stable, and then those things that we think are higher risk. Many of them are going to fail. In the games industry, the reality is more fail than succeed. That's not been our case. We've actually had a surprising success rate in terms of new game creation. And I think it also speaks to our loyalty program. I think the presence of loyalty in that proposition makes for a more receptive and forgiving audience that's going to give you more time to get your products right. That's how we think about risk.
No, I love that. It's much easier to sell to an existing client than to sell to a new customer, right? That's fantastic. And then I love what you're saying about the portfolio. It's almost like stock trading or investing. You want to diversify the portfolio. You've got some moonshot type, high risk type, high reward type investments, but overall your portfolio is stable because you've got the bread and butter, the slow movers, the dividends, or whatever words you want to use to explain it, that just keep paying, right, bring in the cash flow. Yeah. So I love that.
And look, in the environment and the external conditions kind of shape kind of how you want to manage your portfolio. There might be moments where the conditions are such that like you lean into something that might be a bit riskier, but in light of how you see the market evolving, you want to jump on an opportunity. And to me, it's like one of the unfortunate dynamics of companies as they get older and they mature and they scale, that they're not as willing to really lean into those opportunities. And we talk about it a lot inside our company, how to stay dynamic and creative and balance, those risky opportunities with being responsible in the way we just manage the core of our business.
Yeah, no, I love that. So let's talk about some timeless lessons you've learned along the way in life, in business, in gaming, and that you'd like to share with the audience, please.
Wow, that's a big question. I guess for me, it all starts with, work with people that you really trust and where you have a shared passion for what you're doing, because it's really hard. And there are moments that are just incredibly taxing, demanding, complex, and, without the mutual support and that sense of team and feeling dependent on, and connected to a larger group of people and a vision that you've invested so much in, then it's just not nearly as fulfilling, as rewarding. So I think, for us, it really just starts with the people. Work with people that are like-minded, that share your values, that are just decent, trustworthy, and really exceptional at what they do. And then, just be relentless in your pursuit of, the vision that you have. Don't settle. I think too many people too often think that good is good enough. And, the cycle of my career, what I've learned repeatedly is that the very difficult and hard to achieve, high standards of execution, and whether it was in hospitality, where I ran a complex like Wynn and Encore in Las Vegas, where you're delivering 5-star service at a scale that is just unimaginable, and it's because you just have to be maniacal about every detail. And so it's how do you imbue that idea and that notion into every single person that's a part of that team, and shaping and delivering that service for Playstudios. It's about the games and the game content, and achieving a level of just creative substance and integrity that people feel. They know that we care about our products, and that we care about them as our players, and that we care about one another as coworkers, and that just everything is important and being attended to. So I would say, sweat the details, they matter, and do it with people that you care about because they matter. And don't get overly consumed with the content of what you're delivering to a consumer, that really the consumer is what matters most. So stay really grounded and consumer centered in your thinking and your approach. If ever you're confused or distracted or discouraged, just talk to your consumers, and they have all your answers. They'll inspire you, they'll motivate you, they'll help you understand the things that you're getting right that you should do more of, and the things that you're not, that you should do less of. So I think there's probably a theme there, in those different examples or that I just shared, which is, it's really about people, and making the right choices in terms of who you work with, and then ultimately what you focus on.
Wow, I absolutely love that. Fantastic. That's so true too. If you like that question, next question for you: what are some timeless mistakes you've made and or learned, and how do you avoid them going forward, that you'd like to share with the audience?
I would say the mistakes that I've made probably have more to do with maybe being overly deliberative at times, and not really trusting my instincts. And I think that particularly as what you do scales, and you're responsible and accountable to more people, and the consequences of your choices tend to kind of ramp up, you want to make sure that you're fulfilling your responsibility to all of them, to all of your stakeholders. And so you tend to maybe be a little bit more cautious. And for me, that kind of impacts the dynamism of the team, the organization, and so I'd rather err on the side. I think there have been moments where I've not found the right balance between being really thoughtful, but then just being really aggressive. And once I make decisions, then it's about getting aggressive and getting on with it. And it's in those moments where you venture into something that's unknown and unclear, that you enjoy hyper learning and growth. And that's when it's about just thinking on your feet, and trusting and having faith in your team. And it's out of those moments that really surprising things emerge. And so I would say, more of the tougher lessons I've learned have to do with, finding that right balance between, being overly cautious versus like really having some faith and knowing that you'll figure it out. Just get on with it and you'll figure it out.
Yeah, and it goes back to your earlier point too. If you have great people and you kind of let go and trust them, magic happens. I love that. Yeah, it's very powerful. Thank you for that. Next question. What makes a great leader?
I think it's somebody that is trustworthy, thoughtful, curious, empathetic, appreciative, intensely driven, and that helps to enable the people around them to do their best work and to have a sense for the real impact that they're having on one another and on the organization and the success of what you're trying to do. I mean, for people to feel that someone that leaves people feeling really validated and important to the overall success of the organization. I think that if you're able to do those things, then you'll get the best work out of people, and then they don't necessarily have to be the single source of vision and clear strategy, but they need to inspire and motivate that, place the right emphasis on that too. So, someone that can help either provide or pull from the collective team a very clear sense for where you want to go, where you want to be, help resolve the path for getting there, and then leave everybody else feeling as if they're capable and able to go and achieve those things by applying themselves. So, yeah.
Beautiful. I love it. Next question, and then I'm going to get back to the business here. Let's talk about adversity and obstacles. What are some obstacles or adversity that you've had to overcome as a serial entrepreneur? How do you handle them? And what are some mistakes you see people make with respect to obstacles, either giving up or failing or fear taking over? If you can speak to any of that, please, we'd appreciate it.
Yeah, look, I mean, being an entrepreneur is about just contending with a series of obstacles. They're just always coming at you because, you're typically doing things that either haven't been done or aren't fully resolved, or you're just a young, less mature company. And so you're integrating people at the same time that you're just trying to execute and create, a product or a service that you're going to deliver and then learn from that experience so you can optimize and ultimately create something that's commercially viable. So, there's just constant obstacles along so many different dimensions of the business. As a startup or as an entrepreneur, resourcing your venture is all consuming, until your company is self-sustaining. You're constantly in a cycle of raising capital at the right valuations that you can then invest to achieve certain clear milestones that mark that you've enhanced the value of your opportunity and you've de-risked it to some degree so that you can then raise more capital to advance you to the next value enhancing milestone. And so, you kind of go from cycle to cycle. So, the challenges of that can be all consuming because as you're doing that, you're recruiting, building teams and trying to achieve deep connection to the business and the opportunity and the alignment. And so, it's just hard to pinpoint very specific obstacles. It's like, it's what I love about being an entrepreneur or having companies that are less mature, or what we now that we're over 10 years old try to do and keep the company very dynamic, is to just not get too comfortable and to push ourselves to keep venturing into, opportunities that are less known and less clear. Because there's I guess the theme emerging here. That's where magic happens. That's where there's all kinds of new and opportunities that are going to take you in surprising directions.
No, I love that. That's really, really, really powerful. Let's go back to the business now. What's misunderstood for Playstudios that you'd like to share from an investing standpoint or from a consumer standpoint? Anywhere you want to go with that, please.
Yeah, I mean, I think that our unique position is probably not fully understood by the markets. I think that they look at us as a traditional game publisher, and they kind of hold us to the standards that they hold most game companies to, which in the current environment, It's been a little bit challenging as an industry. I mean, for the first time in the last year and a half, 2 years, we've had kind of secular headwinds, but they're easing. And but I think if you look at us, we're a company that, as I alluded to earlier, has a balanced approach to managing our portfolio. We invest pretty heavily in growth opportunities and altogether new opportunities. And so that tends to compress our margins. But it, in our view, leaves us well positioned for future growth. I think the whole playAWARDS proposition and dimension of our business is not understood. It's something we spend money on, so it compresses our margins and our EBITDA flow through, but it is an absolute investment that we're making in our future, the future of our business, and how we're going to diversify it and how we're going to unlock this whole new dimension of value by evolving from a game company into a platform that publishes this extensive variety or portfolio of games on top of that platform. And delivers this really unique proposition. And there's characteristics around platform plays. And the reason why they typically fetch much higher values is because they become part of the core infrastructure of the companies and products that adopt them. And so, when people look at and think about adopting loyalty mechanics in their games, first of all, they should do it because it absolutely translates to a lift. We call it the loyalty lift in all of our metrics, whether it's early retention or long-term retention or conversion and increase in monetization over a lifetime, the capacity to extract value out of the different cohorts of players you're acquiring. It does all of those things, but once you've introduced it, it's very hard to take it away. You just can't. It becomes just an integral part of the experience and the value of the game. So I would say that's what people don't fully appreciate, the degree to which, we've evolved our playAWARDS program into a generalized solution and what the opportunities are for us to leverage that going forward to create value. And in fairness, I don't know that I or we have done a really good job, telling that aspect of our story and who we are. And so we'll continue to do more of that, and kind of evangelizing it externally. But I think that's probably what's misunderstood about us.
No, I love it. I mean, my specialty is to help people tell that story. So we'll do a much better job there. So question for you. I know Tetris is doing fantastic. It's a throwback to when we were kids playing Tetris. It was one of the games we grew up playing, or early on gamers would play. I know that's very successful. Can you speak about the growth of that franchise, please?
Yeah, I mean, first of all, Tetris is one of the most beloved franchises in all of gaming, and so we're passionate about it as a brand. And we were fortunate just over a year and a half ago to acquire the rights to Tetris, and not only the rights to it in its mobile applications, but we inherited also a game that had previously been developed by another company, which we've been optimizing. And so as we've gotten into it, incorporated our playAWARDS proposition and evolved the game and its mechanics, it's enjoyed really healthy growth. I mean, we've doubled its audience and tripled the revenue that we enjoy from it. And so it's been a meaningful contributor. And we're really excited because we have a bunch of Tetris opportunities that we're advancing. We think about Tetris as a franchise, as its own sub-portfolio within the broader portfolio of our games business.
Right.
And so we have existing products, or this one product that's got great momentum, and we're investing in altogether new products that we think are going to allow us to more fully unlock the potential of Tetris as a game format on mobile devices, which it's not yet fully found its footing. And so when you look at other puzzle game formats that have achieved super scale, with hundreds of millions of people playing them every day, there's, in our view, no reason why Tetris shouldn't have at least tens of millions of people engaged in playing it as a game format on any given day. And so with that as an ambition, we kind of think about and look at what has worked in terms of popularizing other casual game formats that have moved from having meaningful success to just being overwhelming, kind of just super scaled products. And so there's very definitely a consistent playbook that has worked across different game formats that we're applying in Tetris's case. And so, really excited about it as a brand and as an opportunity for us. And as we cultivated our relationship with the Tetris company, the group that owns the rights to Tetris, they're amazing and credible partners and very supportive. And so we're very optimistic about it as an opportunity for us.
I love Tetris for what it's worth. I have my kids play it and I play it. It's a fantastic game.
Awesome.
So one more question for you. Let's talk about earlier you mentioned that there's not a lot of people doing what you're doing. In fact, companies that are competitors that tried to IPO and then they've kind of either got acquired or just left the space. Let's talk about the consolidation in the industry and what opportunities that means or creates for Playstudios, please.
Yeah, look, I mean, there's been a lot of consolidation, and it's because, scale really does matter, and there's certain network effects. And, I think the scaled companies that have diversified portfolios, are investing more energy and leveraging their player network and cross-promoting into their other products, and then leveraging that audience as they look to acquire other assets, as opposed to investing in building their own and integrating those into their networks. And so, the consolidation and using an organic kind of growth as a primary driver of value over the last 5 years, 7 years has been very prevalent across the industry. We've started, it was one of the reasons why we went public. We wanted the currency to be more acquisitive. And soon after we went public, we did the Tetris acquisition. We acquired another really great casual game company called Brainium, and we've incorporated their products into our overall ecosystem. And we've not yet introduced playAWARDS into those products, but that's coming here imminently. And so when we see a ton of opportunity for us to continue to find really great complementary games or portfolios of games and amazing talented teams that we can incorporate into our business platform. And what's unique about us and what we think will allow us to drive outside synergies is that as we incorporate games into our ecosystem, we are employing our loyalty program. And so not only are we saying, hey, welcome to the family, the players that are playing the games we've acquired, we've got these other games that you might want to try, and actively promoting those games, which is what everybody else does. We get to incorporate our loyalty program and say, now there's even more ways for you to amass and to accumulate loyalty currency and get more rewards. And there's all these incentives for you to actually sample and try our other games. So our capacity to, find, acquire, integrate, and drive growth with games and game companies that we would look to acquire, I think is quite unique and something we'll continue to do.
Yeah, I love that. Not only welcome to the family, but stay in the family, I guess, if I hear you right. Simply what's being said. So I know PlayStation has 4 unique value propositions. If I hear you right, just to recap a little bit, there's a unique vision and a unique model. And then there's a diversified portfolio. You've got margin expansion, which we really didn't dive into too much on this call, but we might do that again in the future. And you've got aligned interests where your management and shareholders are aligned. The stock itself is undervalued, in my humble opinion. There's a lot of room for growth. Let's talk about that growth going forward. What are a few points that you'd like to share with the audience with respect to future growth that we haven't already discussed?
I think it's just, we are a company that still is deeply committed to investing in growth and future opportunity. We see unrealized potential within our existing core portfolio of products that we continue to work to realize, and we see enormous opportunity there. We have early stage products that have great traction, and we're encouraged by the metrics that we think are going to be the future growth drivers. And we've got altogether new products like the Tetris new casual games that I alluded to that we think could really dynamically change the profile of our company. So, within our play games business, we're very excited about the portfolio of opportunities that we have. And then for our playAWARDS business, the fact that we've made enormous progress generalizing it so that it can not only support our existing products, but be provided as a service and unlock a whole nother dimension of value, I think really sets our company up for a ton of growth in the future. And so, we're long-term thinkers. We talked a little bit about risk and risk profile and how we balance our investments. I've never managed the company quarter to quarter. That's just not the nature of our industry. It's very dynamic. You're constantly learning and adjusting. But to learn and adjust and deploy new content and new features and optimize your business, is just a constant journey that we're on. And so I think that, we're incredibly, there's among the publicly traded game companies, we're just in a very unique position. We're still early in the cycle of our achieving our full potential. So it's an opportunity for people to get into a company that they can, if they're patient, that they can see continue to grow and enjoy a lot of value. And I don't think there are all that many kind of opportunities for investors and certainly small institutional investors to get into a small to mid cap game company that has the kind of growth potential that we have. So I mean, I like how we're positioned, and like you, I think we're undervalued. So it's a good moment.
Yeah, no, I love that. So if I can summarize, I hear 5 points. 1, you want to advance the playAWARDS platform, which is the loyalty component, which I love. 2, increase profitability. 3, expand, diversify the game's portfolio. And then 4, enhance the business model. And then 5, this kind of ties it all together. It's the power law distribution model in your world versus the bell curve model. And if the audience isn't familiar, there's 2 kinds of distribution. The bell curve is like kids in the classroom. Some get A's, some get B's, some get C's, and some get D's and F's. But the power law distribution is like the population of cities in the country. So if you look at the number of cities there are, and you take the average population of all the cities, it's not accurate because New York City, Miami, LA, Chicago have millions and millions and millions of people. So if your job is to create a water system for the average population of cities throughout the country, it's not going to work. So in your business, if I hear you right, Andrew, there's that J curve or that power law distribution where 1 or 2, even just one game can hit and then just lead to tremendous profitability for even just a small segment of your audience. Out of those 15 million users or 10 or 15, you can have just a handful of that, not a handful, but I guess a small percentage of them really generate the vast majority of profits going forward. Is that a good summary of everything that you discussed?
Very well stated.
Thank you. So beautiful. Final thing I'd like to ask you, Andrew, and then we can wrap up, is what's the best piece of advice you'd like to give to the audience or to your 30-year-old self?
I guess, I'll focus on my 30-year-old self as opposed to your audience. So for me at 30, it would be trust the people around you, surround yourself with great people, and then trust them to help you make the right choices, and then lean in. Don't be tentative, have some conviction and get after it.
Love it. I love it. Well, Andrew, thank you so much as always. The ticker symbol is MYPS. People can follow you or go to playstudios.com for more information, and hopefully we'll have you on again soon. This was fantastic.
Sounds great. I really enjoyed it. Thank you, Adam.